Good morning and welcome to the Noble Capital Markets Virtual Equity Conference. I'm Joe Gomes, Managing Director and Senior Analyst at Noble Capital. Today, I have the pleasure of introducing Bit Digital, a company which I currently cover. Following the presentation, we will have some time for Q&A. Feel free to submit questions using the Submit a Question function. With us today from Bit Digital is Sam Tabar, CEO. With that, I'm going to turn it over to Sam. Sam, the floor is yours.
Thank you, Joe. Hi, and thanks for joining me today. I'm Sam Tabar, Chief Executive Officer at Bit Digital, and I will be taking you through our investor presentation. Before we begin, please review our investor notice and FLS disclaimer on slide 2. Bit Digital is a sustainable platform for digital assets and AI infrastructure headquartered in New York. We are listed on Nasdaq under the ticker BTBT. First, a high-level overview of the company and where we are today. We have two key business lines, Bitcoin mining and high-performance computing, abbreviated as HPC and also known as Bit Digital AI. We began Bitcoin mining in 2020, and we have produced over 6,700 Bitcoins since then. At the end of the third quarter, we owned more than 48,000 miners, representing 4.2 exahash. Approximately 2.8 exahash of that was actively hashing as of the end of March. We also believe it's important to diversify our regional, political, and counterparty exposures, and we do this by working with several well-known hosting companies across the United States, Canada, and Iceland. Sustainability is a key focus of ours. Approximately 85% of our fleet's run rate electricity was generated from carbon-free energy sources as of the first quarter. Note, I said carbon-free as opposed to carbon neutral. We achieved this figure without buying any carbon credits or offsets. Carbon neutrality is basically a financial term. Carbon-free truly represents a commitment to sustainability. Beyond mining, we also have one of the largest and fastest growing HPC businesses in our industry, which I will expand upon later. Another key differentiator is that we are also the only public Bitcoin miner that is actively staking Ethereum. And we have one of the largest ETH stacks of any US listed company to my knowledge. This slide features additional company highlights. I would like to draw your attention to the right side that features a few data points from our HPC segment, which provides specialized infrastructure services to support AI work streams. The numbers on the right are officially stale as of a few days ago when we announced a very significant contract expansion. For context, we announced this business in late 2023 and quickly signed a contract with a customer for 2,000 GPUs, which produced $50 million of revenue per year locked in for 3 years. On Tuesday, we announced that we officially doubled the size of that contract to supply the customer with over 4,000 GPUs. The contract is now worth a total of $275 million, or roughly $92 million per year. We have a full pipeline of potential customers, and we feel very confident in continued growth this year and beyond. We believe the strength of our balance sheet is a significant competitive advantage. As of the end of March, we had a total of $163 million, comprised of $35 million in cash and approximately $128 million worth of digital assets. As of the end of May, our liquidity position grew to over $195 million. Importantly, we are entirely debt-free. We have already funded all our outstanding mining purchase obligations. Having zero debt and no significant capital commitments provides considerable financial flexibility amidst current market conditions. This slide features a few highlights from our first quarter 2024 earnings report. we generated $30 million of revenue, representing a 266% growth over the prior year. This also represents around 2/3 of the revenue we generated for all of 2023. Adjusted EBITDA grew significantly to $59 million for the quarter, with the improvement driven by the commencement of our HPC business, gross margin expansion, and higher Bitcoin prices. GAAP EPS was positive 43 cents for the quarter on a fully diluted basis. Our production cost per Bitcoin, defined as electricity and other hosting fees divided by Bitcoin production, was approximately $19,700 for the quarter. Profit sharing fees amounts to around $10,300 per Bitcoin for Q1. Strategic priorities for 2024. This slide shows our key strategic priorities that we laid out in 2024. First, we aim to double the size of our active Bitcoin mining fleet to 6 exahash by the end of the year. We also intend to grow our digital AI business, which will soon have a revenue run rate of approximately $92 million per year following the announcement earlier this week. Our goal has been to reach $100 million run rate for this business, which now appears quite conservative given our progress to date. Third, while these priorities will require capital and we plan to use our balance sheet prudently, we will only deploy capital when the expected returns justify the expenditure. We are also continuing forward with our proof-of-stake efforts, mainly involves the accumulation and staking of ETH to generate yield. We are believers in the ETH network and the smart contract landscape, and we believe that the broader public will soon begin and appreciate the value proposition of Ethereum. And lastly, we are committed to our goal of becoming entirely carbon-free and setting the industry standard for sustainability. We believe a diversified hosting portfolio is essential in mitigating certain risks in our industry. Years ago, our fleet was mining in China, and we made the strategic decision to migrate the entire fleet and operations team to North America several months before China announced a ban on Bitcoin mining. This experience has strengthened our resolve to diversify our operations both geographically and across regulatory jurisdictions. Following our entry into Iceland last year, we now have mining operations in 3 countries, the United States, Canada, and Iceland. Our HPC operations are currently located in Iceland as well, but as a separate, specialized data center. Our expansion into Iceland received significant media attention, including a front-page article in the business section of the Wall Street Journal and 2 different mini-documentaries produced by Bloomberg, one featuring our HPC business that was published in April. Moving on to our infrastructure strategy, our view is that we prefer to be on the infrastructure light end of the spectrum. We achieve that by working with portfolios of hosting partners, which are featured at the bottom of this slide. We currently have more than enough contracted power with our hosting providers than we need to power our current fleet, providing ample runway to support future growth. Our strategy is to align ourselves with the most efficient and reliable counterparties and expand those relationships once they are proven out. We constantly analyze new potential hosting sites, and as we do, we seek to secure not only the most economic power sources, but the most eco-friendly as well. One key differentiator for BitDigital is that we are the only public Bitcoin miner that actively stakes Ethereum. By staking ETH, we are able to earn a passive yield and compound our digital asset position over time. Together, we believe Bitcoin mining and ETH staking are complementary businesses when combined, and it creates a powerful flywheel effect. In essence, we mine Bitcoin and subsequently convert a portion of the mined Bitcoin into ETH, and then which we stake and generate rewards that can then in turn be compounded and redeployed into mining investments. This perpetual flywheel helps us fund our core operations with funds that wouldn't exist if we purely stacked Bitcoin on our balance sheet. One important distinction to make is that we purely stake for our own account. The SEC has previously cracked down on companies that offer staking services to individuals. This means that we are one of the few companies that can still legally offer investors exposure to the economics of ETH staking. It appears likely that the SEC will soon approve spot ETH ETFs. We believe potential approval and subsequent fund flows into ETH could be a significant catalyst for the underlying ETH price. We are well positioned to benefit from a potential bull run, given we currently have over 20,000 ETH on the balance sheet. Importantly, the spot ETH ETFs will not be able to stake ETH, but BitDigital can, providing us with a significant advantage, as our ticker will be one of the only ones in the public marketplace with exposure to staking economics. I'll now spend a few minutes discussing our newest business venture, BitDigital AI. BitDigital AI, referred to as HPC services in our financials, is a new business line that provides specialized infrastructure to support generative artificial intelligence, AI, workstreams. We have procured a fleet of NVIDIA H100 GPUs that have been deployed in a purpose-built data center in Iceland. These GPUs supply these GPUs supply the computing resources to power our customers' generative AI applications. Entering this business was relatively seamless for us as it draws on core competencies from our Bitcoin mining business, including the procurement of mission-critical equipment and sourcing the best data centers to power the machines. We're positioning ourselves to occupy an essential part of the AI supply chain, as GPU resources are the lifeblood for generative AI and large language models, which require mass amounts of computational power. Our long-term goal is to become the market leader provider of AI infrastructure as a service to the EMEA region, which we define as Europe, Middle East, and Asia. This slide provides some additional context about our HPC offerings. Our business is built to suit, whereby we work with our customers to optimize their needs. This includes network design, hardware procurement, software applications, and data center selection. We're able to partner with customers that have existing data centers or data center leases in places and with customers without data center access. While we do not currently own our own data center, we have a strong network of data center partners with locations around the world, and this allows us to select a data center that meets our customers' needs, as some of them would like to have assets deployed closer to their own headquarters. We are also in the process of evaluating certain M&A opportunities, which may lead us to owning our own Tier 3 data center in the future. One of the key differentiations between BitDigital and other companies that have announced plans to enter into the AI market is that we didn't announce an aspiration. We announced a firm customer contract. We announced a business. We announced a contract expansion earlier this week. BitDigital will provide a customer with over 4,000 GPUs for 3 years. This represents approximately $275 million of revenue to BitDigital and carries very substantial margins. Importantly, this contract can be scaled even further in 2024 and beyond. The contract started earning revenue in late January, and this produced $8.1 million in revenue during the first quarter. We report revenue from this segment every month and disclosed $4.2 million in revenue last month. In September, the run rate should increase to around $8 million without any new contract additions. However, we are working hard on closing several customer deals and expect to be able to announce incremental revenue streams near term. The margins in this business are very, very strong. We reported 61% gross margins for the segment for the first quarter, through margins that would have been 70% if not for a one-time credit issue to our customer. For context, we would need the price of Bitcoin to more than double from current levels for our mining margin to be even comparable to our HPC margin. This slide illustrates some of the core competencies of Bit Digital AI, as well as some of the benefits for the company and shareholders. First, we are positioned to fill a unique niche in the AI supply chain. Secondly, we are uniquely capable of navigating a very tight GPU market and procuring H100s, and we are very experienced in securing the most cost-effective rack space in specialized data centers. We also launched this business without a sales force in place, and we have a strong pipeline of potential customers. At this time, we have more customer requests than we're able to fulfill with our existing supply. However, it's clear to us that we need to expand our team and add dedicated headcount to support the growth of this business. So we are now actively working on making key hires to help accelerate growth. We are also focused on the EMEA market, which is unique compared to competitors who are mainly focused on North America. We have offices in this region, and those local relationships enable us to win business without spending considerable resources on BD, on business development. What does this do for Bit Digital as a whole? It provides us with a stable stream of revenue that makes us less susceptible to digital asset price cycles. The margins in this business are also significant, as energy costs are about 15 times less than Bitcoin mining on a per revenue basis. The contract makes the cash flow very predictable, which enables us to plan for the future of our overall business more confidently, as the future price of Bitcoin is no longer the main determinant of our future cash flows. This business is also highly scalable. We have significant customer interest in GPUs, and the broader market is growing at an exceptional pace. Lastly, with this business in place, we are now exposed to two key secular growth trends: the evolution of blockchain technology and the explosive growth of AI. Thank you, everyone, for your time, and we can now move to Q&A. Joe?
Thanks, Sam. Great presentation. So let me start with the announcement of the doubling of the HPC contract. Can you provide a little more color as to how you plan on financing the server purchases? You talked a little bit about margins. Do you think that margins on this part of the business will be the same as the first half of the contract? Can you delve a little bit more into that? And then I have a couple of other questions related to that side of the business.
Sure. So if you're asking about how should we look at capital needs for the rest of the year, and whether debt is viable, or we continue to evaluate debt financing options and view that as an attractive way to fund our HPC business. We have zero debt by design because in the past, we never wanted to borrow money for Bitcoin mining equipment because you cannot predict future cash flows in the Bitcoin mining business. You do not know where Bitcoin is going to be. So for those people who took on debt in Bitcoin mining, we think that's a fool's errand because you just can't predict cash flows. However, on the HPC side, that's a completely different story. And we've been evaluating term sheets and looking to secure the lowest cost of capital and get the best overall terms. Capital needs for the remainder of the year are variable and are contingent on the pace of our HPC business growth. But for mining, when it comes to the mining side of the business, we believe we can reach our 6 exahash growth with about 40 million in CapEx. The HPC build-out is contingent on the extent to which we grow and execute sale-leasebacks, which lower the capital needs, including the recent contract announcement, which should cost about $30 million. Reaching a $100 million run rate should only require around $40 million of total capital. And the other variable for capital needs that we have would be for a potential M&A on the HPC side, which we're actively evaluating.
Okay, thank you.
For more context on the contract specifically, the 30 million to fund that would be cash and digital assets on the balance sheet, but it's 30 million because we executed a sale leaseback on half the GPUs. So that cuts the CapEx in half, but because that's accounted for as an operating lease, it also reduces the margin profile relative to the first tranche where there was only 790 GPUs leased. So the margin profile will be slightly less, namely because of the operating lease component.
Okay. And you talk about, you got a big pipeline. You mentioned in the first quarter call also about, looking to expand the sales force. Any timing on, when you're seeing some hires for the sales force? And do you have the capacity in Iceland to add more clients there, where you need to look for another facility if you were to come up with more clients?
Yeah, so the capacity in Iceland is already secured for client one, including this second tranche that we just launched on Tuesday, and we're reserving all that capacity for client one so they could expand much more than where they're at today. And for clients 2 and 3 that we hope to be announcing soon, we have a network of data centers in which we can currently negotiate deals as we close the deal with these clients. And so they're secured, but they're not going to be in Iceland. They're going to be elsewhere in the world, and more on that when that's announced.
Okay. And kind of along the same lines, obviously, the ability to source the servers, whether it's on the mining side or the HPC side, is a huge competitive advantage.
Yeah.
I mean, what does Bit Digital have there, that allows you to get these servers as quickly as you can, to get these businesses up and running?
We have special relationships with these counterparties like NVIDIA and so on. And one of the reasons for that, there are a number of reasons, but one of the reasons is there was a time when NVIDIA was doing ETH mining equipment. I think over 10% of their revenues was ETH mining equipment. This was a while back, many years ago, before ETH went from proof of work to proof of stake. Those relationships remained intact from many years ago, before this whole space became hot. And those relationships happened to be the right relationships to have when the HPC space took off. And so you can call it luck, but we call it hard work. We maintained those relationships over the years, and they happen to be the right ones. And now we have special access to those machines, and we get them very, very fast. And in this business, you have to have basically 3 things. You have to have, it's not a business unless you have 3 things, right? You have to have special relationships with the equipment providers. You have to have access to the correct kind of data centers. Bitcoin mining data centers cannot be repurposed into an HPC thing easily, so that it's apples and oranges. And the third thing you need is, of course, clients. If you don't have all those 3 things, you're just announcing an aspiration. We don't announce aspirations, we announce a real business.
Right. But let's switch to the mining side for a second. Obviously, we had the halving event in April. The price of Bitcoin really hasn't reacted strongly yet. I mean, it did pre-halving. But maybe give us a little of your thoughts or your take of where we are in the post-halving environment. There's also been a lot of at least proposed consolidation in the industry. Kind of give us your viewpoint on that, and where you see, potentially Bit Digital playing in there.
Well, as I mentioned on the call, we'd have to see Bitcoin more than double in order to even approach the margins that we're getting in our HPC business. So that is something that I would encourage the audience to look at when they're evaluating our company. We're currently just being valued, I believe, on just the Bitcoin mining side, which is way more very minimum multiples compared to the HPC, because we're in that Bitcoin mining bucket. But the reality is that the HPC business is massive for a company our size, and the revenues that we're getting from it, and that's only growing. And with respect to Bitcoin and its future, personally, I believe that there is upside structurally in Bitcoin. I can get into reasons for that, but cyclically, there's going to be a lot of gyrations. So when you zoom out, it looks good, but when you zoom in, the price of Bitcoin could make you lose some sleep.
You did see CleanSpark buy Grid Infrastructure this morning, which is a rare public-to-public mining acquisition. I'm not sure what the value is there. I haven't really dug in, but that could, cascade a wave in M&A.
Okay. And so I guess kind of, you're seeing some of that. If you were to look at kind of prioritize your M&A, it was be more of, expanding on, buying, let's say, another mining company. Would it be look more at trying to vertically integrate, or more on the HPC side?
Yeah, it would be the latter. It'd be to vertically integrate on the HPC side.
Okay. Got a question here from the audience. Another one. They want to know, what is the cost of mining 1 Bitcoin?
For the first quarter is 19,600 just on a electricity cost basis, which is the number one cost input for mining. There was also 10,000 of profit sharing, so about 29,000 for the first quarter. That was obviously pre-halving, so the black reward has since been cut in half. But you wouldn't necessarily just double that number because the profit sharing would decrease commensurately. So, and it would probably be, and there's a lot of variables to even give a precise answer at the moment, but somewhere in the mid 40,000 range is probably appropriate.
That includes the profit share. Yeah. Many companies, when you ask that question to our peers, everybody has a different definition of what the break-even price is. So it's important to unpack what that definition is when they give you that answer.
Okay. And if we're, kind of still sticking with that. Oh, wait, hold on. One question. A couple more questions came in from the audience. They want to know if you will mine Caspa. I guess Amara announced yesterday that they will mine Caspa. So I don't know what, maybe you want to answer that question, or what your thoughts on that are.
Well, it goes to show about the pressure for our Bitcoin mining companies to diversify their revenue stream, especially post-halving, since margins have gone down by 50%. The way we've done that is we've launched this HPC business, which has our business in HPC there's no halving in AI, and we've been able to lock in revenues for many, many years. So we like that approach of locking in hundreds of millions of dollars to diversify our investor stream, to diversify our revenue stream. I don't want to comment too much on Caspa. I understand Mara is trying to diversify their revenue stream. I think the way we did it, I'm much more comfortable.
No current plans to mine Caspa.
Yeah, to say the least.
All right. And I'm running a little bit short on time here, so I'm going to throw one more out at you. You mentioned your goal of getting up to 6 exahash by the end of the year. I think the current active rate is about 2.6, 2.8. If you get to that 6, do you think they're all going to be active by the end of the year, or is it just kind of we'll have them in inventory and then putting them active as we can?
We haven't made much progress on the goal of getting to 6 exahash. We're about halfway there, but that's intentional. We have several hosting opportunities that should be finalized imminently. So we'll be able to provide considerable progress towards this target. But look, we're extremely busy closing these deals on the HPC side, given these really fantastic margins. Focusing on improving our fleet efficiency and lowering our mining costs, that's an important focus. But continuing to prioritize the highest ROI opportunities for CapEx, that's really important as well.
Well, great. Sam and Cameron, that's all the time we have today. Fantastic presentation. We appreciate you guys taking the time, educating the audience some more about the Bit Digital story. We look forward to continuing following you guys into the future. Thanks again, and have a great day.
Thank you. Thank you for having us.